Help in Pharmaceuticals in association with Higher Secondary Principals Forum.
So let us go for the next thing now. Next slide. Forfeiture of shares issued at par. Now let me make the concept of forfeiture clear to you. Now shares are issued to the people. Okay, people have bought. Applications I have received. Shares are allotted. Then allotment money is also received, or sometimes allotment money some people might not pay. So I will send them a reminder to pay. So there is some legal way of doing it. Still the amount is not paid, then the company might decide. It might be allotment money or even further call money. Allotment the person might pay, further he might not pay. But whatever calls due are not paid by the shareholder. In that case, his membership will be cancelled. Those shares will be cancelled. That is called as forfeiture of shares. So, formally going to say forfeiture of shares means cancellation of the shares in the books of the company for non-payment of the dues. Okay, so any calls which are not paid, shares are forfeited. Okay, now what is the journal entry for forfeiture of shares? Now see, you are forfeiting means you are cancelling. So the amount that you have already transferred to the share capital, that means you have increased your share capital. Now you have to reduce it because you are cancelling those shares. So your share capital should be reduced. Share capital is what balance? It is a credit balance. You want to reduce it, so you have to debit it. So you have share capital account debit. Okay, now what is cancelled? You are debiting to share capital. So whatever you had included in the share capital, now you want to cancel, you are debiting it. Then you have two share forfeiture account, and then you have two calls in arrears account. Okay, now let me explain to you. Two calls in arrears, this was the amount that is not paid. Share capital is debited with the amount that the company has called. So share capital will be the called up capital. Calls in arrears is the amount that is not paid. So that means there is some amount which is already collected by the company that is to be transferred to share forfeiture account. I am giving you a small simple example. Okay, 100 rupee share. So you bought from, I am a company, you bought from me one share of 100 rupee. Okay. Now this 100 rupee share, you had to pay me 20 rupees on application, 30 rupees on allotment, and balance on the first call. So you paid me 20 rupees, you paid me 30 rupees, that means you already paid me how much? 50 rupees. I asked you to pay all the money, so that means you were supposed to pay me 100 rupees, but you paid me only 50 rupees, and other 50 rupees you are not paying. So after taking the due action, I am cancelling your membership, I am cancelling your share. So now what was my share capital? Full 100 rupees, because I had made all the calls, I had put all 100 rupees in my share capital, but I did not receive 50 rupees. So calls in arrears are 50 rupees, and share forfeiture means how much I have already collected on the share is 50 rupees. Now that 50 rupees that I have collected from you is my money now. Now I am not going to give you. I have cancelled your share, but I am not refunding this money. Okay. So this money remains with me. Now this was a share when forfeiture when it was issued at par. Issued at par means I had sold this share at the face value. Now let us see further. What if you want to forfeit the share which was issued at premium? Okay. If the premium amount has been fully realized, that means I had issued the share to you. Now 100 rupees example I gave you, no? I had given you the 100 rupee share, I had issued to you 100 rupee share, fully called up, I had asked you to pay full 100 rupees in different stages, application 20, 30 on allotment and 50 on first call, whatever call, on my calls. So now there was a premium. So I had issued it at 110. Okay, and that call money, that is 10 rupees, I was supposed to take in the premium amount. Sorry, the premium amount of 10 rupees I was supposed to collect in my calls, first call and second call. Okay, but I have asked you to pay now full amount, you have not paid. So that means over here, see, premium is not collected. So there can be a case wherein I collect the premium, because if the premium is collected at application stage only, I have collected the premium. So if I have collected the premium, I don't have to worry. My forfeiture entry will be just like forfeiture of the share issued at par. Now let us see. Okay, share capital account debit, to share forfeiture account, to calls in arrears account, being share forfeited for non-payment of allotment money and calls made. Okay. So here now see, this narration is not very clear over here. It will depend on the case. If allotment money was not paid and you are forfeiting, then it will be being share forfeited for non-payment of allotment money. If the allotment money was collected, it was only because of the calls, then your narration will be being shares forfeited for non-payment of calls made. Okay. So it is an explanation. It depends on the case why the shares are forfeited. Now here see, the premium amount was collected. So once it is already collected, I don't want to cancel it. It is collected by me. Okay, and I have put it in the securities premium, and it is true. My securities premium is showing me that amount, and I have collected. I am keeping it with me. So I don't have to worry about it. But in the previous case where I told you, the premium amount was with the calls, and the calls money is not received. So the premium is also not received, and I put the money in the premium, securities premium, but I have not received. Now what I will have to do? I will have to cancel. So let us see now the next one. If the premium amount has not been realized, that means I have not received the premium amount. Why I didn't receive? Because it was with the calls, and the call money is not received. So along with the call money, premium is also not received. So I have to debit share capital with whatever amount I had transferred to share capital. Then securities premium also I have to debit. Why? Because I have shown this amount in securities premium, but I have not collected. So what I will have to do? I will have to cancel it. Securities premium is what? It is a credit balance, correct? Now I have to reduce it. So what I will have to do? I will have to debit it. And then to share forfeiture account, this is what I have already collected on the shares. And then I have 2 calls in arrears. This is the amount that I have not collected. Okay. And then I have the forfeiture narration. So being shares forfeited for non-payment of, now this will be depending on you, whether call money, allotment money, but including premium money. So premium money is not collected, and that's why I have debited securities premium account over here. Okay. Now, as I told you, I am keeping the money with me. I have cancelled the share. I become the owner of the share now. This share I means who? The company. I can sell it. Okay, I can resell it. That's why I am saying reissue of forfeited shares. Okay. Now these forfeited shares can be reissued either at par, at premium, or at discount. Okay, those forfeited shares can be reissued at par, premium, discount. Now here I have reissue at premium. So if the shares are reissued at premium, what will be the entry? Now see, when these forfeited shares are reissued, we are collecting the amount in one go. Okay, we are not taking steps now, application, allotment, nothing. We are just collecting the amount. So let us see, bank account debit, because we are receiving the money, transferring it to share capital. So to share capital account, then it was issued at premium. So premium amount will go where? In the securities premium account. So we will have 2 securities premium account narration being forfeiture forfeited shares reissued at premium. So now we had collected some money on these shares earlier when they were issued originally, correct? And now we have that amount in our share forfeiture account. When we passed forfeiture entry, you all have credited share forfeiture there, no? With that amount. We have it with us. Now we are reissuing these shares. When we are reissuing, again we are reissuing it at a profit, and we are putting that profit in securities premium account. So anyways, we got our full share capital, that means full share value, plus we got premium. And what about the money that we have kept there in the credit in share forfeiture account, which was on these shares only? Is it not a profit for us? Yes, it is now a profit for us. So this profit, what type of profit it is? Revenue nature or capital nature? It is on shares, correct? So naturally it is capital nature. So this profit of capital nature which we have on forfeiture of the shares, and we have kept it in the credit, share forfeiture account is credited and we have kept it over there, that money now has become total profit for us, and so we have to close share forfeiture account and credit it to capital reserve account. Okay, so we are crediting it to capital reserve account. So being profit on reissue of forfeited shares transferred to capital reserve. Is this clear, students? Yeah? Can we go for the next one now? Yes. So let us go for the next one. So now we have reissue of forfeited shares. Now reissued at discount. So we have this cancelled shares with us. Now we are reissuing it. Now we can reissue it at lesser price, lesser than the face value. Okay, so that means we can reissue them at discount. Now this discount amount should not be more than what we have already collected on these shares. Okay, remember that. So the discount can be maximum to the extent we have collected on these shares when they were originally issued. Okay, so if it is issued at discount, let us see what is to be done. Bank account debit. Okay, so bank, we are going to receive money. Share forfeiture account debit, that means the discount. Okay, but what are we doing with this discount? We are using this money from the share forfeiture account. We have already got money collected on these shares, no? From there we are using this discount. Okay, we are making this discount good by using from that share forfeiture account. That's why bank account debit, share forfeiture account debit to share capital account. So we are transferring the face value of the share to share capital account. So the full value of the share is transferred to share capital, and we have given it at discount. But from where we used the discount? We used it from share forfeiture account, which we had earlier when we cancelled when the original shares which were issued. Okay, being reissue of forfeited shares at rupees dash per share as fully paid. So we have issued this share at discount but as fully paid, that means full amount. That's why full amount we are transferring to share capital. Now we had in forfeiture some amount. Now some amount is used over here to make the discount good. Okay, still some amount is remaining with us. That amount is a profit for us. And what type of profit? Capital profit. What is to be done with the capital profit? Capital profit is to be transferred to capital reserve, and that's why we have the entry. We are closing share forfeiture account now. So share forfeiture account debit to capital reserve. Okay, being profit on reissue of forfeited shares transferred to capital reserve. Students, are you understanding this? Yeah? Okay, just go through this again and again. Try to understand the concept behind it. Okay, why we are debiting, why we are crediting, then it becomes very easy. Accounts is very easy subject provided you understand the debit and the credit. Okay, everything, the full subject is revolving around debit and credit. Okay, so let us go for the next one now. So let us do a problem. Okay, now one more thing here I have to tell you. If the shares were issued at par, if these forfeited shares were issued at par, then what? If the shares were issued at par, the entry would be very simple. Money comes in, so bank account debit. Where am I going to transfer this money? To the share capital, to the share capital account, okay? And full money that I had collected earlier on the originally issued shares, that will be going to my capital reserve. So in the second entry, I will be saying share forfeiture account debit to capital reserve account. Now let us see the working of this, okay, how we are going to use these entries in the solving of the problem. So let us take a problem now. Problem and solution. So forfeiture and reissue of shares. So I have a problem over here wherein I am going to take up two aspects. One, forfeiture. I want to teach you all forfeiture of the shares, and also I want to teach you all when the shares are reissued, how to go about it, okay. So the concepts are made clear to you in the journal entries. Now I am just making the application of the journal entries over here. Try and understand. I cannot take up all the journal entries and all the applications. You should understand the concepts, okay. That is what I can do with this limited time, okay. So now over here, Ambika Company Limited forfeited 500 equity shares of rupees 100 each. So how many shares are forfeited? 500. What is the face value? 100. For non-payment of first and final call of rupees 20 per share. So what is not paid? What is not paid? 20 rupees is not paid. What was the face value? 100. Okay. These shares were then reissued at rupees 70 as fully paid. So I have sold these shares again at rupees 70. Fully paid means as if 100 rupees is paid. That means I have sold it at discount. How much is the discount? The discount will be how much now? Tell me. Tell fast. It will be 30 rupees. Correct, no? Because the face value is 100. I have sold it at 70. So the discount is 30. Very good. Okay. Now, pass necessary journal entries in the books of the company. So you are asked to pass necessary journal entries. Now try and understand the problem. Problem says there are some shares forfeited. How many shares? 500. What type of shares? Equity shares. Okay. Why are they forfeited? For non-payment of final call. What was the final call amount? 20 rupees. That means how much we have already collected? 80 rupees. Correct? Are you understanding? Because 100 rupees was the face value. 20 rupees is not paid. So how much is already collected? 80 rupees. Okay. So how much company has made a call? Full value. Because last final call of 20 is not paid. That means company has asked you to pay. Okay. So called up is full 100. Paid up is 80, okay. Calls in arrears is 20 per share, okay. Now, pass necessary journal entry. So when we are passing the journal entry, we want certain information. What is that information we want? We want how much is collected, no? Calls in arrears first. Let me see how much is calls in arrears. Why are we forfeiting? Because we are not getting some money. How much we are not getting? We are not getting 20 rupees per share. On how many shares? 500 shares. I am not getting 20 rupees. So how much I am not getting? I am not getting 1000 rupees. On 500 shares, 20 rupees I am not getting. That means my calls in arrears are 1000. Now I go ahead. How much I have already collected? On this 500 shares, I have not received 20. What was the value of the share? Value of the share was 100, correct? I have not received 20. So how much I have already received? I have already received 80. So, So 4,000 rupees is already collected, right? Yes. So let us go ahead now and try to solve the problem. Let us prepare the journal particulars. I have LF, then I have debit rupees, credit rupees. Okay. So I have my journal ready. I am forfeiting, so I am cancelling the share capital. So equity share capital account debit. How much is the share capital? How much money I have transferred? The called up money. See, remember, I have to take the called up money. What is my called up money? I had made full calls. So full value is my called up. So 100 rupees on 500 shares. So 500 multiplied by 100. How much am I receiving? How much I am debiting? 50,000. Correct? 2 calls in arrears. That means I have not received certain things over here. I have done C calls in arrears. It is 500 multiplied by 20. So it comes to 10,000 and 500 multiplied by 80, it comes to 40,000. So my calls in arrears are 10,000 and my calls already collected, whatever amount already collected is 40,000. So here in my share capital, 50,000 I had put in my share capital. I want to cancel it now because I am forfeiting those shares. So equity share capital account debit 50,000. Then you have 2 calls in arrears 10,000. Okay, I have calculated over here. Then you have 2 share forfeiture account. 2 share forfeiture account. How much? How much I have already collected. So I have to get the amount that I have already collected, 40,000 rupees. Okay, so this is my forfeiture entry. Now let me write the narration. Being 500 equity shares forfeited for non-payment of first and final call of rupees 20 per share. Now I go for the next entry. See, I have forfeited. Done. Forfeiture entry is done. All of you are clear with it. Again I am repeating it for you. Equity share capital account debit. This is with whatever amount is called up. In our case, we have 500 shares on which 100 rupees is called up. So 500 multiplied by 100, I get 50,000. Then what is not received? I have transferred to share capital 50,000. So I am now cancelling it by debiting share capital. Now what was not received? 20 rupees was not received. So 500 multiplied by 20, I have got 10,000 rupees. Okay. Now this 10,000 rupees I will be putting 2 calls in arrears. Then I have 2 share forfeiture account. This is the amount that I have already collected. So how much? 500 multiplied by 80, 40,000. So 2 share forfeiture account, 40,000. The other way to get that share forfeiture, you know calls in arrears, very easy, right? You know share capital, the face value multiplied by the number of shares forfeited. So you get that 50,000, you get 10,000. So 50,000 minus 10,000, you get 40,000. Okay, that is also another way of finding it. Next, now I am reissuing. What they told me that it is reissued at 70 rupees. So it is reissued at discount. So I am going to collect the money. How much money am I going to collect? I am going to collect 70 rupees per share. On how many shares? 500 shares. So let me do bank account 35,000. How did I get that 35,000? I got that 35,000 by here 5,000 shares multiplied by per share 70 rupees. So I get 35,000. Okay, I got 35,000 over there. Now 30 rupees I am not getting, I am giving it as a discount. But from where am I using this money for discount? I am using this money from share forfeiture. Here share forfeiture, I have got 40,000 with me now, which is already collected on these shares. So from there I am using that discount. So I will say share forfeiture account debit. Okay, how much? 30 rupees discount, no? 30 multiplied by 500 shares. So I will just do it over here now. 30 multiplied by 500. Okay, that's how I'm going to get this amount. Okay, 15,000, correct? So I get 15,000. Now this is to be transferred to share capital because these are issued now. Now I'm transferring this amount to share capital. So I will have two share capital account. Amount is full value of the share, that is 50,000. 500 multiplied by 100, full value of the shares. Now I have to write the narration. Being the forfeited shares reissued. Okay. Now see how much I had in share forfeiture account. I had 40,000. How much did I use now for making that discount good? 15,000. Okay, I had 40,000. I used 15,000. How much is remaining with me? 25,000. Is it not my profit? Yes. So this profit I am going to transfer where? It is capital nature. So where am I going to transfer? I am going to transfer to capital reserve. So let me first close the forfeiture account. So I am closing it. It was credit. Now I am debiting it with 25,000. That was the money which was remaining in that. Then I have to capital reserve 25,000. Okay. Then I have to write the narration. Being profit on share forfeiture transfer to capital reserve, and with this problem is done. Now what is the last stage remaining? Total up. So done. Let us total this up, make the total. It comes to 1,25,000 both the sides. Okay. So finally how your problem should appear. Now this was the rough work with pencil work I had done, but please don't do any pencil work on your paper. Pencil work is not evaluated for exams. Remember that. Please don't use any pencil work there. Okay. You can use this in the rough work. Do this in the rough work. Okay. So this problem is done. So finally your problem has to appear like this. Now you all have understood that forfeiture and reissue. Now let us try to understand this one. This is forfeiture of partly called up. All the time I was telling you, when the shares are forfeited, the share capital has to be cancelled to how much? To called up capital. I was saying all the time called up capital, though I was taking the face value, no? I was saying called up. So here you will understand what it is. Okay. So forfeiture of partly called up shares. That means company has not asked to pay full amount. Only part amount is asked. Okay. So and these shares are now forfeited. What is to be done? I am also including in that, see, which were issued at premium, where premium was also not collected. This is the difficulty level problem, students. If you understand this, if you get this, everything you can easily do. Okay. So try and understand, and I am sure all of you can understand. What is important is your full attention. You give me full attention and this is made easy for you. Okay. So let us start. Now here we have problem, once again I am saying, wherein forfeiture of partly called up shares. So we are learning two concepts, what to do when the shares which are partly called up are forfeited, and next part wherein they were issued at premium and the premium amount was not collected. Okay. What to do if premium amount is not collected? So we have already transferred it to the securities premium. When premium is there, we transfer it to securities premium, and now this amount is not collected. So premium account, securities premium account, which is shown in the balance sheet, will be a wrong figure. Why? Because it includes the amount which is not collected. So we have to cancel it. Okay. So let us see. Let us try and understand these entries first, this problem first. So let us try and understand the problem, read the problem once, twice, till you understand the problem, and then let us go for the solution. Now, RK Company Limited forfeited 200 shares. Okay. So RK is forfeiting how much? 200 shares. Of face value rupees 100. What is the face value? 100 rupees each, for non-payment of first call money of rupees 30 per share. Okay. So 30 per share, first call money is not paid, including 10 premium. Now the premium was included. This 30 rupees includes premium. So if you see, this 30 rupees is 20 for capital and 10 of premium. Okay, 20 of capital and 10 of premium. Now, the company has not yet made the second and final call of rupees 20. So, company has not asked to pay the final call. So, how much is the called up? Tell me, what is the called up capital? 100 rupees is the face value. 20 rupees is not called up. So, called up capital will be 80. Called up capital is 80 rupees. Okay. So, let us try and see this, how to do, what they not yet made the second and final call. Okay. So, pass necessary journal entry in the books of the company. So, they have asked us to pass simple one journal entry. Okay. So, this can be asked for 2 marks. So, let us pass the journal entry for this. We are forfeiting the shares. So, just remember, we are forfeiting means we are cancelling capital. So, debit, let us pass the journal entry, debit share capital account. Okay. Then securities premium also to be debited. So, debit securities premium account. How much is the securities premium? 10 rupees. Securities premium, how many shares forfeited? 200. So, 200 into 10, you get this. Okay. Next, calls in arrears were there, that is why you are forfeiting. So, 2 calls in arrears, this is a normal entry, forfeiture entry. 2 share forfeiture account, 12,000. Okay. So, you have got the narration now. Okay. Now, let me explain to you. Share capital, how I got 16,000 on share capital. How many shares are forfeited? Forfeited shares are 200. So, I have 200 multiply by, what is the called up amount? 80 rupees. So, multiply by 80, I get 16,000. Securities premium, how I got? My shares are 200 which are forfeited. Premium amount is how much? 10. So, 2,000. Okay. Calls in arrears, we have already found. No. What was the calls in area? First call of rupees 30. 30. So, 200 shares on which calls in arrears is on 30 rupees. So, I get 6,000. And share forfeiture account. How you get this share forfeiture? You have 12,000. How you got the 12,000? 200 multiply by 60. How you got that 60 rupees? 60 rupees is the capital which you have already, the shareholder has already paid towards the share capital. Now, what was the called up? 80 rupees were called up. Out of this 80 rupees, how much is towards the capital that he has not paid? 20 rupees. So, how much he has already paid? 80 rupees minus 20 rupees. So, he has already paid us 60 rupees. So, 200 multiplied by 60, 12,000. Okay. Now, another easy way to get that 12,000 is you make this total. This comes to 18,000 minus 6,000. So, you get 12,000. This is also the way you can do it. So, the journal entry is done. Okay. So, finally, when your paper shows or your book shows the solution, it has to be clear. This working notes I am just eliminating, and your problem should be, solution should be like this. Okay. So, your solution should be like this. Okay. Now, let us go for the next. Issue of shares for consideration other than cash. Now, the shares, all this time the entries that we were passing were for the shares which are issued for cash. Now, issue of shares for consideration other than cash. Means sometimes what happens, the company buys some assets or buys some other business of some other organization, and in that case instead of paying them cash they give them shares. That is called as issue of shares for consideration other than cash. So let us learn this now, the accounting for this. When the asset is purchased on credit, now this is a journal entry that you all have learned in your 11th standard. No, easily you can pass. What is that journal entry? When you are buying an asset account debit to vendor's account. Okay, vendor is a seller. Now since the name is not given, you will say to vendor's account. Okay, narration, being asset purchased on credit. Now what if the business is purchased, if you are taking up somebody else's business? Now along with the business you will get their assets and you get their liabilities. Assets are debit, liabilities are credit. So you will be debiting all the assets and crediting all the liabilities. Now assets account debit, goodwill account debit, liabilities account credit, and capital reserve account credit, and to vendor's account. I will explain this entry to you in detail. Being business purchased. Now see over here, I want to explain this entry to you carefully. Please try and understand. Whatever assets you are taking up, you will be saying asset account debit. Okay? Till then, you don't know about this. You don't know about the goodwill. Okay? Then liabilities are taken up, liabilities are credit, so you are going to credit the liabilities. Okay, so till then you don't know this. Okay, you don't know, you are unaware of these two things. Okay, these two things will come in picture later on. Now let us see, assets have been taken up, assets account debit to liabilities account, because it is a credit balance, you say to liabilities, to vendors. Vendor means the person who has sold to you. Now he is your creditor, you need to pay him the amount, so you will say to vendor's account. Okay. Now if you see the value of the assets, okay, is more, say over here you get say 5,000 rupees. I am just giving you an example. Then you have decided to buy this at 10,000 rupees. The liabilities were say 2,000 rupees. Okay, liabilities were 2,000 rupees. Now see, I have asset account debit 5,000 rupees. I have two liabilities account 2,000 rupees. I have two vendors account 10,000 rupees. Now just check whether this entry is okay. Is the debit equal to credit? No. What is the credit? 12,000. What is the debit? 5,000. So we are paying more. The person is paying more. Now why is the person inside the company is paying more. Why the company is ready to pay more? Why? Because that business has some goodwill. Okay. So now we will have to record that excess amount as goodwill. So goodwill account. Now see, 5,000 assets, we are paying total credits are 12,000. The difference now is 7,000, which is for goodwill. Okay. So once again I am telling you, assets debit 5,000, liabilities 2,000 credit, then vendor is 10,000, that is the purchase consideration we have agreed to pay him. So the difference is the goodwill. When the difference is in debit, it is goodwill. Now what if the difference was in credit? If the difference was in credit, how do we do about it? Okay. Now let me explain to you the other part, where my assets are 1 lakh. Okay. Liabilities are 10,000. I have fixed purchase consideration 70,000. That means assets value is more and I am getting it only for say 70,000. After minusing the liabilities, my net assets are 90,000 and the net assets worth rupees 90,000. I am getting them for 70,000. Okay. So what does that mean? That means I have made a profit, and this profit is what type? It is of capital nature. So I have to put that profit to the capital reserve account. So what is my profit now? my profits 70 plus 10, 80, 80 plus 20, 1 lakh. So my profits is 20,000. Is this clear to you? These entries are clear. Now let us put it in practice. Okay, so we'll go to the next slide and put it into practice. How to calculate the number of shares to be issued in settlement of purchase consideration. Now, as I told you, sometimes we buy asset or we buy business and then we have to pay the vendor. So instead of paying the vendor in cash, we are giving the shares. So now tell me how to find how many shares to give. So there is a formula for it. So let us learn. Number of shares to be issued to the vendor, which is equal to purchase consideration upon issue price. So how much we have to pay divided by the issue price. Okay, that is how we get the number of shares to be issued to the vendor. So now let us do the practical work for that. Problem with solution. Issue of shares for consideration other than cash. So let us see how this has to be done. Here the company has purchased an asset, purchased a business, and instead of giving cash, the company is giving the shares. So let us do the recording of this entry. Okay, MK Limited purchased the business of SM Limited consisting of machinery rupees 5 lakhs, other fixed assets rupees 3 lakh, and creditors worth rupees 1 lakh. So you are getting assets and along with the assets you are getting liability for purchase consideration of rupees 7 lakh 80,000. So purchase consideration is how much? 7 lakh 80,000. So you are ready to give 7 lakh 80,000. The company issued equity shares of face value rupees 100. So the company is ready to give shares of 100 rupees. Each at a premium of 20%. So 100 rupees share will be given at what price? 120 rupees in settlement of the purchase consideration to the vendor. Pass necessary journal entries in the books of the company. So let us make the journal now. Particulars, LF, debit, credit. Okay. So first entry is buying the business. So let us pass the entry for buying the business. So all the assets that we have got will be debited. Assets is a debit balance. So machinery account debit 5 lakhs. Then we have other fixed assets account debit 3 lakhs. Then we have the liability credit. Okay, the creditors are there, it's a liability. So liability how much? 1 lakh. And how much we are ready to give the vendor? What is the purchase consideration? To SM Limited we are giving 7 lakh 80,000. Correct? Now just total it up. This thing is 5 lakhs plus 3 lakhs, 8 lakhs. The other thing 7 plus 7 lakh 80,000 plus 1 lakh, 8 lakh 80,000. That means credit is more. What is the difference? Difference is 80,000. Transfer it to goodwill account. Okay. So it has to be transferred to goodwill account. Now write the narration. Being business purchased. Now we are issuing shares instead of giving cash. For how much? How much we have to pay SM Limited? SM Limited we have to pay 7 lakh 80,000. SM Limited is our creditor now. No? For how much? For 7 lakh 80,000. Now this 7 lakh 80,000 how are we paying? By shares. Okay. So first we will say SM Limited is to be settled. So SM Limited account debit how much? 7 lakh 80,000. How we are paying? By shares. So first we should know how many shares we are going to give SM Limited. So let us see how much we are going to give. So number of shares issued is equal to purchase consideration. What is the purchase consideration? 7 lakh 80,000 divided by share issue price. How much we are issuing this share? The share is of 100 rupee at a premium of 20. So for how much we are selling it? We are selling it for 120 rupees. So let us see this. 7 lakh 80,000 divided by 120. So how much do we get? 6,500. So we are giving 6,500 shares. Okay. Now when we are giving shares, on this 6,500 100 rupees will go to capital, share capital, and 20%, that is 20 rupees per share will go to securities premium. So let us see the entry now. Equity share capital 6,500 multiplied by 100. So 6,50,000. Are you understanding this? Okay. Next, to securities premium. How much securities premium? 20 rupees per share. No? So 20 rupees multiplied by 6,500. That is 1,30,000. So narration. Okay. Being 6,500 equity shares of rupees 100 each issued at 20% premium in settlement of purchase consideration. Now let me tell you how did we get this 7,80,000. We got it from here because we have to settle him. He was our creditor, now we are settling him. So how much shares we have got? 6,500. So on 6,500, what is the face value? 100. Into 100 I get 6,50,000. Now securities premium 6,500 shares multiply by how much is the securities premium per share? 20 rupees. So I get 1,30,000. So is this clear to you? Now we have to make the total. So total of both the sides. Okay. With this our problem is over. Now what I will have to do is clear the workings. No? So let me clear the workings. So your answer should be like this. Okay. So with this my concept of issuing shares for consideration other than cash is done. Okay. Thank you students. So it was nice teaching you. We have put our efforts. We are trying our best to reach to you because we love you. We love you a lot. Even the community loves you. That's why even Prudent Media is trying to reach to you. Okay, help you. So please put your best and give us the result of our hard work. Thank you very much.
Prudent Scholars, powered by Lupin Pharmaceuticals.